Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having a fantastic day. Let's take a look here at Bitcoin. Oh boy, I got a nice little pullback there when the Asian markets opened up. That makes perfect sense because there was a lot of profit to be taken over the weekend. It's pretty standard in that regard, but we're going to look at some back-end data, kind of see what's going on. And obviously just want to say thank you so much for watching. Hit the like button, comment below if you get a chance. Absolutely appreciate that. And what we're going to look at first, of course, is the liquidation levels and just kind of see where we're at, because when we looked at this recently, there was a larger accumulation at the upper range here at about 60,400 starting to build. That's getting a little bit bigger, okay? And by a little bit bigger, we're talking about $5 or $6 billion. It's crazy how small that seems compared to a lot of the liquidation levels we look at. But the general consensus here is that that's starting to grow, and that's kind of the heavier concentration. Some of it got swept, but not all of it, right? I was expecting right around 60,700 to get hit. That didn't get taken out, mostly just a wick up to 60,200. While I'm happy with it because we didn't hit any stop loss on our short trade, it's also an area that is still left remaining and could possibly still get filled. So what we're going to do is take a look here next. I'm just going to double check, see if there's any CME gaps here, which there are not, which is good. So we don't have anything to worry about there. So minus liquidation, we can kind of see here that the price action is pulling back. So there is, again, some incentive for the price to come back up here to 60,700. There's some liquidation left there. I didn't look at the exact number. Yeah, 4, 3, and 3. So basically somewhere in the range of about 10 to 12 billion at about 60,600. Okay, so just know that could get swept there, but for the most part there was an attempt, basically a double top, and the price pulled back. Okay, so let's look at the daily time frame, work our way down. And actually, no, correction. We're going to go ahead and look at the weekly first, kind of get perspective since we did finish a full week's worth of trading. So let's take a look here and kind of see what's going on. Because when we look at the week of last week here, let's go ahead and actually look at a better chart. This is more of a macro chart here that kind of helps us understand better moving averages, because this is a Bitstamp chart. It goes back a much further so we can kind of see better SMAs. When we look at this here, we're still under 20-day SMA, and we're above the 50. So those two things combine those two things together, we're kind of in between awesome and wonderful. Okay, what that basically means is it's great that we're over the 50-day SMA, but it's not wonderful because the fact that we are not past the 20-day SMA. Getting above the 20 is an important thing. So just know, until we get over that level, we're not like blindly bullish, if you will. Not like we want to be blindly bullish, but for the most part, that is essentially a better place to be able to expect the price action to break out further and faster. We look at here, we can see RSI, we're under 50, but we're right at 50 basically. So I don't find this to be a bearish or bullish thing. It's more of a neutral scenario, which is actually good. Okay, so don't overthink that. Not too bad. The weekly time frame is not terrible. We can see stochastic is trying to swing up here, of course, and hasn't yet, so we don't want to get prematurely bullish. So the general consensus on the weekly is that we're not there yet, but we're not in dire straits either. Taking a look at the SMAs, we are still below all four. Once again, getting over the 20-day SMA, this descending trend line is going to be very helpful. Okay, we're not there yet. If we get there, then we might be able to shift gears and consider some longs, but for right now, I'm still a little more along the lines of holding shorts open and likely taking profit at the downside. We can see stochastic starting to top out. Money flow index is starting to increase. We got to keep in mind that's going to spike up because this last day here, roughly 14 days ago, has since fallen off. Okay, so that's kind of how the MFI works. It'll average out the more recent 14 candles, so just bear in mind that's a little flawed today because that just dropped off. We can see MACD is converging here too, but it's not strong at all. So again, generally favorable, but not great. We're still under the moving averages and under 50 in the RSI. I'm not convinced we're back on track yet. 4-hour time frame, same scenario here. We're under all moving averages as per usual. We got our local point of control at about 58,400. But if we zoom out, we can kind of see more within this entire range that's going to shift a little bit, and we're going to see we're underneath that resistance at 59.5. So again, I've been talking about this for a while. A closure above 59,500 would put us in a better situation. We have yet to close above 59.5. It was 59.4 on Saturday. We closed as low as 58.4 yesterday, and here today kind of breaking even. So not a whole lot here telling us that we're on track. Okay, same thing here with the hourly. If we click to confirm the cloud, I'm venturing to guess we're back below the cloud, which we are. We spent a little bit of time in the sun, and now we're kind of diverging, but the lagging span is free and clear for the moment. But if we don't move down further soon, then we may actually see the price end up recovering to establish itself as a higher low. Okay, and we could be in a slow ascending trend and essentially be able to retest that 60,700 mark. So overall here, the hourly time frame is telling us that we're still diverging. There's no reason to open a long position. You're better off going to find more success taking shorts at this exact moment. You don't just blindly jump into a short, but if you were to, consider a short along the lines of 58.9. Let me go ahead and kind of pull this up so you can kind of see it. I'll post this playout chart on our Twitter, Telegram, and Discord, of course. But according to the local fibs here, we can see 0.382 is holding as a resistance. If the price does end up pulling back and continuing further up, then it would probably come upwards as pretty much as high as about 59,200. So we'll go ahead and post this again, update online, kind of show you exactly what's going on there. If you're not familiar, I do have a Twitter, Telegram, and Discord where I post anything relevant to what I do and what I'm trading. So either way, that's kind of where we're at there, folks. There's nothing super spectacular. We're still mostly bearish or leaning more towards that. And the inverse, of course, is that if we break above 59.5, I think we might be able to consider some long positions, because by then we'll be above some moving averages, perhaps breaking our descending trend line, and effectively back above 50 on the RSI. We're still not there yet, so appreciate your patience, and of course, those who took the short trade recently, I know it got kind of scary there for a little bit, but that happens all the time in trading. And again, you look statistically, we've only had to close one trade out this month here at a slight loss, and at this point we're looking pretty good. So do not worry about it. Don't overthink it. Everything here so far is telling us the price is still likely to come back down. Just be mindful, again, of this liquidation sweep potential here at about 60,700. Okay? All right, folks. Hopes, again, that was very helpful. Thank you so much for being an awesome part of my life. I look forward to seeing you on the next one. Have yourself a great rest of your day. We'll see you soon. Bye-bye.